What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at the ever so popular S&P 500 ETF SPY, ticker symbol SPY, on a variety of time frames in anticipation of the next trading day, Friday, May 17th. All right, guys, SPY here today, down $1.09 per share. That's minus 0.21% in regular trading hours. A little bit of volatility here in the after hours, but after it's all said and done, as we head in a couple hours deeper, at least as volume tanks off, it's really slowing down and it's essentially flat. So either way, take that with a grain of salt because volume, again, is very, very low in the after hours. But listen, let's take a look here on SPY at everything the market will give us from today heading into tomorrow. First of all, a couple of macro things going on tomorrow. Not really all that big of a deal, but we have some Fed speakers. So at 10:15 Eastern time, we get the Fed's Kashkari and Waller speaking. And then at 12:15 Eastern, Fed's Daily is speaking. And that's it for tomorrow. So listen, let's take a look. Let's start here with doing our daily volume profile analysis on the 5-minute chart. What we're really doing here, guys, is we're looking under the hood to pull out whatever bias we can get that isn't clear from the chart itself. By bias, I mean bullish or bearish. All right, so let's take a look here. Now, listen, by the way, guys, SPY is a daily upload. I cover this every single day. And my goal here, we're getting close, is 10,000 subscribers. So I appreciate you subscribing to the channel, and I'll keep the SPY videos coming every day. Now, if we look at this volume profile, guys, you can see that we had a very contextual open, higher volume, and then volume fades off. Through the rest of the day, then, volume, it was volatile, don't get me wrong, but there really wasn't anything that was so out of the ordinary. We got a pop here that's too much of a risk of fooled by randomness. That was, of course, a larger bar. So clearly a sell bar. However, as far as assigning bias, I'm really after what's obvious. Okay, at least semi-obvious. And that usually requires consecutive bars of elevated out of context volume. And then as we head into the end of the day, pretty normal. You see a little bit of the beginnings of a pop in red volume. Had that continued, that would have been actually pretty large bearish bias, but it immediately got broken up by a fade in red volume and then some green bars mixed in. That last bar on the day, guys, it's going to be a rebalancing bar. Even though it was a larger red candle, we typically see the highest volume of the day, at least the highest or the second highest after the open. It's typically going to be that last bar before the closing bell. That's when a lot of algorithms trigger on SPY to rebalance, and then that also occurs on the bar after the bell. Whereas on most blue chip stocks, it's only the bar after the bell where you see tremendous rebalancing going on. It's a little different here on SPY. So honestly, guys, today on the volume profile, really not a lot. So let's move on. Let's move on to the psychological, those self-fulfilling prophecy levels. All right, these are the levels on the most popular time frames with the most popular indicators. The reason I'm doing that is because I want what has the most amount of eyeballs for that psychological effect, right? Self-fulfilling prophecy. I want what has the most people watching them. So here on the 30-minute, you'll notice I have that white line is the 50 period, and the gray line is the 200 period simple moving averages. Now, yesterday, if you guys remember here on SPY, we were in a really good position. We were starting to pull away from the 50, right? And that was a very bullish situation. When you have, on any time frame really, especially the 30-minute, 4-hour, and daily, if you're a bull, you kind of always want to be in a position where both the 200 and the 50 are ascending in an uptrend, and the stock is uptrending using the 50 as an ascending support. That's a great situation to be in. Well, we actually tested it off the open right here, and we respected it very well. However, midday we gave it up and rejected into the close. Okay, so we have now given up that 50 period here on the 30-minute chart. Now, tomorrow, this is really simple. Bears. It was a late day rejection off the 50 period to confirm that as short-term resistance. So, bears, you're not really out of the woods yet. Pun intended. Tomorrow, if you guys could see a retest of the 50 period, you're going to want to see that retest and then reject hard on as much volume as possible. You want a big sample size agreeing with what you have to say about rejecting off the 50 period. Now, bulls, ideally tomorrow, we want to get back in that ideal situation, right? So rip upside through the 50 period on high volume, really, retest it on much lower volume. You want a much smaller sample size, betting on the breakback downside, and then confirmation as the volume pours back in with a bounce off the 50. That is like the perfect scenario for a bull. Of course, perfect rarely happens, but that's really what we're after from a bullish perspective. Now, let's move on here to the 4-hour chart and take a look. You guys can see that there's a little bit of distance here between the nearest level specific to the 4-hour. It's about a 1.4% downside move needed just to test that 50 period here on the 4-hour chart. So listen, guys, if it comes back into play, I'll be paying very close attention. That would be a relatively large red day, though, for that to come back into play tomorrow. But we've seen bigger days, even recently, on SPY. But just understand that 50 period would be an area of interest, and we'd likely see a lot of decision-making made right around that level. Very similar to the 30-minute. Bulls, of course, you'd want that to hold as support, whereas bears, you'd prefer to crack that to the downside. But really what I'm watching on the 4-hour immediately is if you are a bull, I think really what we want to see is that 50 period just continuing in an ascending pattern, retaking as many whole dollars as possible. Okay, because the idea is to get that thing as close to the current price of the ETF as possible, since it is expected to act as a level, a potential support level on the way down, right, to kind of hang things up. And you would obviously want that as high and close to the current price as we could get it. Now the daily is going to be the most important chart of all. Okay, and you can see that today here on SPY, we tapped some new all-time highs. Now, yesterday, guys, we were talking about how the bears kind of have a big ask to make. Reject off of 530, which they more or less pulled off here today. Get down below each $5 increment is like a stair step. So really looking to reject off 530 if you're a bear, reclaim 525 as resistance. Look to then reclaim 520 in the near term, because the ultimate goal is to test the 50-day, that white line, and get back beneath that 50-day, because that would be a really good way to discourage as many short-term bulls as you possibly could. But bulls, the bulls don't have like that big of an ask to make, right? Just hold 525. The $5 increments are going to be important on SPY, at least when we're really zoomed in, right, like day to day. Ideally, though, retake 530, close at or near all-time highs. That's a really good thing, because then now you're adding a new level, 530, on top of the existing $5 increments that are currently ahead of the 50-day moving average. Not only that, but you're boosting morale of the existing bulls and discouraging even more bulls, right? Playing that psychological game by closing at or near another new all-time high. It's kind of a double whammy if you guys can pull off a close at or above 530. Now look, your implied volatility, guys, compared to the last 3 months, again, down slightly here today. It's the lowest it's been in the last 3 months, guys. So the Vega value in contracts right now is very low. If you've been holding contracts, you've likely experienced some IV crush. If you're looking to buy new contracts, understand that you're paying very little Vega value up front, which is a good thing. All right? Now, expected move. We, of course, have the luxury of daily expirations here on SPY. So the expected move by tomorrow's close, May 17th, compared to today's close, is plus or minus $2.59 per share. That's the market's volatility expectation currently, okay, which is obviously very helpful to know, especially if you're trading options. Having an opinion on direction with options isn't enough. You also want to position yourself to benefit ideally off of not only the directional bias that you have, but also the volatility bias that you have. Is it going to be more or less than the market's expectation? Couple that with your directional bias and you have a really strong position. All right, now, you might be thinking, well, what about directional bias here? The volume. About 6.5 million total contracts traded here today. 2.9 million calls, 3.5 million puts. All right, so a bearish bias on the overall ratio here today. If we break that down by time frame, though, guys, the 0 to 20 delta range, the short-term speculators, 918,000 calls and 1.6, 1.61-ish million puts. So a bearish bias out of the short-term speculators here today, as well as the overall ratio on SPY. Listen, if you're getting value out of the daily SPY videos, I ask you to do one thing: leave a like on the video, and then get out of here and enjoy your day. Listen, I greatly appreciate it, guys, and I'll see you in the next one.